That. Well, you know, what all you saw as the New York market yesterday clearly doesn't seem to be mirroring that right now. We've seen buying in Asia, and right now it just gets even more better. Overnight, we saw the crude oil prices decline by 2%, but it's trading 2% on the higher side right now. On your screens, 90s back for NYMEX and almost nudging $97 per barrel for the Brent prices right now. Peter McGuire, CEO at Exim Australia, now joins us to talk about that. Peter, hi. What a rebound from where we were trading in the New York session yesterday. What do you give this to?
Well, Manisha, good afternoon. I think it's just whipsawing, and it's hard to really pinpoint what do you think are the key points of it. It's really volatile. You've had a couple of information drops as far as IEA warning of gas shortages and into 2023. I just think it's just wild trading, all what they're pushing it around, and that's what happens in these markets, Manisha, 2 and 3% moves.
I remember, Peter, last time we spoke and we were trading at 93 to the Brent, and you said we are closer to 100 than to 90, and that really seems like on how the markets are trading right now, inching more closer to that $100 per barrel mark. What you think can lead the prices closer to that three-digit mark?
Well, Manisha, I would have thought that before considering they were selling a lot of that petroleum reserves, the strategic supply, that their prices would have actually edged a little bit lower, but they're really galloping ahead. That US dollar also is increasing from 110 to nearly 113. So there just seems to be momentum for the crude market. Everything's the focus and leading up to the midterm. So, yeah, you might even be at $100 by Tuesday.
All right. And, you know, there are various factors to watch out for. We've seen a decline in U.S. inventories. The OPEC and allies production has been on the lower side. The European Union embargo on Russian oil are some of the factors that markets are looking at. Add to that the fact that this is winter season demand as well coming in.
Well, exactly, Manisha. And, you know, it should be a very cold winter. So the demand there for heating oils and all the distillates, you've got a very short supply as far as diesel globally. So this is also something that we need to consider. And at the moment, I just think that the crude market seems to be moving to the upside. So it's got the momentum, and it just seems to be a little bit galloping away. It's hit everyone between the eyes. And yes, as I mentioned, I think, you know, over 100 in the short term could be very achievable.
You said above 100. What kind of levels are we watching then for on the higher side? I mean, are we looking at 105 or even higher? What is the range you're working with?
Well, Manisha, I'd like to answer that in about 2 weeks' time, because I won't be surprised if it's 103, 104. I just think that there just seems to be a lot of momentum moving to the upside, and the overall, I think, consumption patterns are going to be strong over that winter period. So everything seems to be lining up for a few extra dollars as far as price spike. And that's what the traders are rubbing their hands with a little bit at the moment, because it's volatile and that's offering great opportunity.
Clearly. I also want to talk about metals because, you know, while the economic data has not been so strong, we've seen a 75 basis rate hike come in from US and European Union and Bank of England too. And with China saying that it's a speculation that they will ease any of their COVID restrictions anytime soon, that did lead to some decline in commodities, including metals as well. But look at the trade today, all metals trading in the positive. So is this short covering? Are the markets now watching out for US non-farm payroll data that comes in today evening as well?
Well, they'll be looking for non-farm in a couple of hours. I think that's probably about 7 or 8 hours till that drops, Manisha. And also you're going to look at what happened as far as China today and Hong Kong. Big move to the upside in equities. So, yes, it could be a little bit of a turnaround. And if they come out with a COVID policy that's a little bit softer as far as the Chinese situation, then that could be a good thing, and they just start to open it back up. So, yeah, we're all sitting here looking into the big animal that is being China and what impact it's going to have to demand as far as base metals and everything else.
And a definite short covering, I mean, as we've seen in crude and metals, is what you are seeing in silver as well. After that sell-off almost a sell-off in the New York session yesterday, the kind of buying back that we saw in metals, including silver, was something of a phenomena. How are you looking at silver prices going forward?
Well, it's 1973 at the moment, 1974, Manisha. It seems to be bid up strongly. So I think that, you know, there might be a little bit more momentum to the silver market. They tell me that, you know, the traders are loving it and plenty of people are hoarding it from a physical standpoint. So that's a good sign. And I still believe that silver's its best days are ahead of it. So let's just wait and see where we are by Christmas. But I won't be surprised if it puts on a couple of bucks.
Absolutely, and a very good market actually when you look at commodities right now. Of course, some support coming in from that weakness in US dollar index as well, but mostly short covering and the bulls really coming back in case of commodities in some big way today.